Hello, everyone. Thanks for joining us in the upstairs room on day 3 of Permissionless.
Oh my God, you know this crew really wanted to be here because they had to find this place.
Exactly. And I think we have a few tens of thousands of people watching on live stream, I'm sure, as well.
Oh, hello. You too.
But first, if each of you could just briefly kind of give a little bit of an introduction for yourself and your personal background, and then we'll get started.
Sure. Hi, everybody. I'm Christine Moy. I'm from Apollo, which is a $750 billion asset manager with businesses in credit, equities, real estate, retirement services. My life's mission has been about putting real-world assets on chain. Previous to joining Apollo 3 years ago, I was at JP Morgan for a couple decades, but more significantly, in the last 10 years, built and led JP Morgan's blockchain program. Working on tokenizing trillions of dollars of treasuries and dollars on permission Ethereum blockchain. So really excited to be here and talk through the future of finance.
Great. Yeah, thanks for having me. I'm Nathan Allman. I'm the founder CEO of Ondo Finance. My background is in traditional finance. Originally worked in private credit before running a small crypto fund, and then I was at Goldman Sachs from 2019 to 2021 on the digital assets team. We worked primarily on securities tokenization. We did some interesting one-off transactions like tokenizing a bond for the European Investment Bank on public Ethereum. And then I left 4.5 years ago to found Ondo. We're focused on expanding accessibility to financial products and services, leveraging public blockchains.
Hi, I'm Joe Cutler, and I am the chair of the blockchain and fintech group at Perkins Coie. And I've been sort of in the space since 2010. I grew up as a privacy lawyer, and I approached blockchain in the beginning from a data rather than a financial services perspective. And then I realized that in order to make money doing this, I needed to learn financial services. So I've been doing that for about half my career. And at Perkins, we advise on all aspects of sort of the crypto and blockchain space and have done a lot of the firsts throughout the years. First money transmitter licenses, first T0 filing with NASDAQ, some of the early ICOs. We've represented a ton of exchanges, wallets, designed the legal architecture behind USDC when it came out, and have just enjoyed the ride along the way, representing people and trying to help them square this very round technology with the legal squares that are the law.
I'm David Schwartz, CTO at Ripple and co-creator of the XRP ledger. I've been in the blockchain space for like 14 years now. Ripple is one of the developers on the XRP ledger and has a stablecoin RLUSD, a number of enterprise partnerships. And I'm personally very focused right now on enterprise adoption of blockchain technologies as a key unlock for mass retail adoption.
Awesome. Yeah, so I think the title of this panel is kind of a little vague on purpose. There's different areas we can go into, stablecoins, tokenization, all that. But rebooting the global financial system, just curious quickly, before we kind of dig in, what those words kind of evoke from where you all sit right now when you think about rebooting these legacy systems. Christine, if you want to start with that. I mean, I guess
Sure.
through, obviously, tokenization you mentioned.
This is how I think about it. I've always been on the side of traditional finance, working at significant incumbent financial institutions. And from my perspective, what we're seeing in this crypto space with blockchain technology, tokenization, the creativity of crypto and DeFi, that has really emerged as a challenger to existing structures, existing systems, existing roles. And overall, I've been able to have the behind the scenes view of how those challenges start as ideas, maybe ideas that people don't really give a lot of credit to, ideas that become prototypes become pilots and press releases. But then at this point, we've all been in the space for over a decade now. Now, something that looks like something that is scaling And, you know, especially where we are in this inflection point in this market, with this administration, where the crypto markets are open, especially in the United States, not only scaling, but ripping. And, you know, I guess like the overall like thing that I see is that this challenge to incumbency is great for everyone. Great because what happens when you have challenge to a system? The system gets better. The system evolves. You have to respond to the challenge, right? And so I'm always, you know, on the side of the incumbent responding to the challenges. But, you know, overall, for all of you here and all of you like on the live stream, you know, it really just means better financial services, cheaper, faster, more efficient, more customized to you. So when I think about rebooting the global financial system, I love what's happening here. And I think the output, regardless of it's on the side of the crypto or if it's the side of traditional financial institutions, everything in between, which is where it probably will land, it'll just be great outcomes for all of us.
Yeah, Nathan, you have anything to add there?
Sure, yeah. I mean, I love all of that and agree with all of that. You know, I might add a little bit on, like, why do we care, right? I mean, finance is all about connecting, you know, those who have capital with those who need capital and, like, allocating resources, you know, including, you know, labor and goods, you know, towards their, you know, highest and best use so that, you know, people can build cool stuff that makes all of our lives better. And, you know, the systems and processes that enable that have gone through, you know, a variety of step function changes in history. You know, you think back to when all, you know, securities were on bearer, you know, physical certificates and had to be, you know, shipped around the world, or, you know, later like wheelbarrowed around New York City. And then, you know, we kind of figured out we could move them all into a vault and, you know, so-called dematerialize them into, you know, an electronic record that was maintained by the, you know, depository trust company. And then we could have these broker dealers be direct participants and, you know, manage distribution to their clients and then bundle, you know, lending and trade execution and other financial services. And, you know, that's all like dramatically reduced the rent seeking and fees and time delays and other inefficiencies that, you know, sort of make this allocation of resources less efficient and less productive. And, you know, I think we've all seen through decentralized finance and crypto, you know, a potentially radically better, you know, lower friction, global, permissionless, you know, 24/7 financial system that just, when you use it, like looks and feels so much better than what we have, you know, even in the US today for people with great financial access, let alone, you know, those in emerging markets who don't have access altogether. And, you know, we're all just trying to figure out how to reapply those benefits to, you know, goods and services and finance in the real world. And, you know, that bridge is like the journey we've all been on. And I think that's what we're excited about in this next reboot.
Awesome, yeah, and we'll dig into a little more of the specific tokenization stuff with Christina and Nathan. Just Joe and David, anything to add on kind of how you think?
I have a little bit of a contrarian view. As I said earlier, I approach this more from the perspective of what the technology originally missioned to do. What was its mission, right? And the concept of disintermediation and replacing systems, I think it's funny actually that they chose the term reboot instead of rebuild. Sometimes when your computer gets really slow and everything's sluggish, you reboot it, and then it gets slow and sluggish and you reboot it. And sometimes you actually realize, oh, it's actually the thing that I keep running that's wrong. And maybe we should just replace that. And so I actually have this nagging fear right now. I want to be clear, I'm very excited about the excitement. I'm very excited about everyone rethinking how we're doing it legally in the United States, regulators that are more open and thoughtful and rational and frankly practical about how they're approaching this. I'm excited there's legislation moving through Congress. I'm excited that institutions are trying to play in the game and doing well. But there's this nagging voice in my head that asks, did you get on the bus without a map? Like, do we really know where we're going, or are we just trying to tweak around the edges and keep everything the way it is? And I didn't pivot from a very fun career to this career to just watch everything re-evolve backward into the same thing, just with a different set of lipstick. And so there's two things in all of it. We could talk for a year about this, but there's two things that I would say in summary that I worry about. One is the original mission of the early blockchain project, and I'm so glad that people from Ripple are here, right? Because you get this. Like, is to democratize access to the control over value, and that's not happening in the institutional rebuild. We haven't democratized much, in my opinion, and I worry about that. I worry that this, and then the second thing is it was also destined to sort of remake the value propositions of aggregation of wealth, money, power, and control into a more balanced system than it was before. And I don't see that happening either in the march towards institutional adoption. And so while we're all excited about new technology, we're all excited about what we can do. We can make a trade faster on a stock exchange. We can make less friction across borders. I just hope that we get out the map once in a while and remind ourselves what country we're in, not what road we're on.
Yeah, I mean, obviously, I think I agree with everything that everybody said. I think the financial system has been very old. It's got a glitzy front end on it, but underneath it's ancient. And I think tech was coming for the financial system with or without blockchain. And then here's blockchain that over the past 12 years in the DeFi space has built, $100+ billion ecosystem without actually having any real financial products to offer people. Like, what does the DeFi ecosystem have? We have collectibles. We have highly speculative, high-risk assets, right? And we have people seeking 20% yield with like a 30% chance of failure. Like, you're not going to rebuild the financial system with that. And we can't produce high-quality financial products from inside the blockchain yet, and maybe ever. And so I think institutional adoption, institutions are seeing the value of systems that nobody can own and control because they know they're not going to be the ones owning and control. Like, unless you're big enough to think you can own everything, you'd rather have a system that's not owned by your biggest and most powerful competitors. And so I'm encouraged. I do think that we have to be concerned, though. I don't think that liberation and freedom and all these positive things we want to see out of a technology are guaranteed to happen. I think we have to be vigilant. I think a good example is the internet, which initially was very liberating and democratizing. I think over the past couple of years, we've seen sort of new gatekeepers emerging, and it delivered on that promise, and now it's kind of reneging. And I think we do have to be vigilant. Success is not guaranteed.
And I know we're going to get into other stuff, so I want to get this in because we won't get back to it real quickly. The other thought that I had in my head preparing for the panel was a merger of a discussion about blockchain finance and technology with what's going on outside in the world. And we just had an election. There was an electoral preliminary here in New York while we were here this last couple days. There's been elections around the world, and there is a growing understanding of sort of a new wave of populism. Like, the populist wave of sentiment is here. And it's actually happening on both sides of the aisle. There are right-leaning populist sentiments, and as we found in New York today, there are left-leaning populist sentiments. And those go hand in hand with what we're talking about, right? And so there's an attitudinal surge right now that institutional players would be wise and probably profitably gainful in harnessing at the moment. And I'm looking for that merger to happen as we get into the nuts and bolts of the tech.
Yeah, and just as you guys were all talking about your background, obviously former JP Morgan and Goldman Sachs leaders here, just curious if you can share a little bit about the dynamic of being on such an innovative team at a very traditional finance company.
Sure. I mean, I think to your point, like, it's true that institutions are not really focused on democratizing access to control right now. I mean, there's a lot of benefits that blockchains bring, and that's just not one that's been the early focus. I think certainly in part because it's not always in their interest to allow for that. But, to David's point, I mean, they also don't, everyone doesn't want to trade on like the JP Morgan settlement platform either. Like, there are competitive tensions between these institutions that motivate even like permission ledgers that are maintained by half a dozen or a dozen of them. which doesn't look that different from a lot of historical financial utilities like clearing and settlement systems that are, set up, owned, and run by the members who use them a lot. But, a permission blockchain run by 10 parties is just like sort of a slightly better version of, of doing that in a lot of cases. So yeah, look, I mean, in my time at Goldman, like that is certainly the type of work that the firm became more and more focused on, like how to use blockchain to drive efficiency, settlement cost savings for existing processes, and like better coordinate what they're doing with the existing institutions. I do think that it's like helpful, foundation work to just start to do things on, blockchain rails so that we can then later plug those into public blockchains where the focus is more on expanding accessibility and enabling new types of, financial products and services. We're starting to see the beginnings of that. I mean, we had a transaction a few weeks ago, with JP Morgan where you could convert, tokenized bank deposits on JP Morgan's blockchain Connexus to tokenized treasuries on AutoChain. It's still like super, super early days for that sort of interoperability, and folks working in those institutions will probably continue to be pretty focused on some of those cost savings.
Yeah, and I was going to ask you about that. So can you just kind of describe the significance of that transaction took place between AutoChain and JP Morgan Connexus, and feel free to weigh in as well, Christine, with your time, all your time at JP Morgan. But and kind of, you said it's such an early step. What are the next steps of what we could see in a similar vein?
Yeah, I mean, I think it's significant in a lot of ways. Like, blockchain or not, it's sort of the first time that you can convert between bank deposits and treasuries 24/7. It provides an access point, if and when it rolls out to production, to like a very large universe of account holders at JP Morgan to be able to on-ramp to the public blockchain ecosystem, right? You can get into our tokenized treasuries over the weekend, and then you can get out into stable coins instantly and, transfer them freely on a variety of public blockchains. So, I think it's really breaking down like this big barrier that has existed between traditional and on-chain settlement rails. And, with future work, I think we hope to see the merging of all of these benefits that institutions have focused on, cost savings, efficiency gains, and the like, with the accessibility benefits that, we and others are focused on in the public blockchain world.
And from my perspective, like, I think it's super exciting because it's just the next natural step, the progression in the infrastructure. I mean, in reality, we're already living in a multi-chain world. And there's been a set of permissionless blockchains, a set of permissioned blockchains, but in reality, they should intersect and just be network and use case specific. Now, something that I learned recently, which I thought was really interesting, is like, okay, when you guys have your cell phones, like you can use them here in your local area, but then when you go to another country, your cell phone works also. But that's a totally different network. But did you also know that not only are there multiple telecom networks around the world, of course you did, but like even like, say for example, like a football stadium where communications between team members and coaches has to be ultra secure. They have their own telecom network, it's permissioned, but it's all interoperable together, right? And so, I think this is just gonna be a natural evolution. We just happen to be really close to the raw metal right now because we are building the raw metal, but over time, just quite like how you have no idea and you don't really care what cell phone network you're on, your cell phone works, that's how it's gonna be with financial services. It don't matter if it's a permissionless blockchain or permission blockchain, as long as you're getting your money where it needs to go at the lowest cost, fastest to the place where you said you wanted it, even if it traverses permissionless and permissionless back to it, doesn't matter to you as long as you get what you want. And that's what I was talking about when I started talking about, this new challenge to the system is just gonna result in better outcomes for all of us.
Awesome.
So kudos, Nathan, for making that first step in that next step in infrastructure to evolve us to where we want to go.
Just building on the JP Morgan legacy.
And a big theme
So
of
much love here.
permissionless so far has been stablecoins, obviously, and tokenization. There's a lot. I know, Ondo is getting ready to launch global markets, and you could talk about that a little bit, and obviously ACRED, Apollo, and your work with tokenized private credit. Would also be interested in Joe and David's thoughts on, from kind of outside of Ondo and Apollo, just where you kind of see the biggest tokenization opportunities and the segments that could really boom next, and what that will depend on. Yeah, let's start outside of Ondo and Apollo. Yeah, David.
Well, so I'm most interested. I come from the DeFi space, and I'm most interested in what's going to get mass retail adoption of blockchains.
Right.
And I think there are people. You think about what do people need from what do ordinary people need out of a financial system? They need sensible investments. They need retirement accounts. So I'm super interested, and it's also to some extent low-hanging fruit. It's not as difficult regulatorily as things like tokenizing real estate, which has real obstacles. But things like commercial paper, loan portfolios, money market funds. I think those are the things that can really, the DeFi ecosystem has got, over $100 billion without actually having the products and services that people want. I mean, if we had that, I think that's what's going to enable developers to build blockchain solutions that have real mass appeal. And that's exciting to me. I see sort of enterprise adoption as a means to an end.
David, you get me all excited over here talking about retirement services. Like we have at Apollo, we have a large retirement services business, and I never thought anybody in crypto would care about that. So thank you. I'm feeling that. We got to do something over here. Back to the original point on democratization, access, and everything. So for those of you that are not as familiar with Apollo, our focus has been generating excess spread per unit of risk. Like generally, you can just think of it as generating alpha, and through private markets. And we do this in a variety of different ways. We have a significantly proprietary credit originations platforms. Like we have 16 different companies that we bought or incubated or invested in that create all sorts of different yielding credit products, like a mortgage or a loan for you to buy a hot tub. If you've ever seen Amazon delivery trucks driving around, fleet leasing, truck fleet leasing. Trade receivables financing, and then additionally, we lend directly to mid-cap and large-cap corporations. Most recently, giving, for example, an $11 billion loan to structure to Intel to build AI production. Essentially at Apollo, we generate a whole range of credit products that are yield generating, that are the basis of the retirement accounts that you speak of. And additionally, we are at our Athene insurance business, the largest underwriter, one of the largest underwriters of annuities for people to help retire better. For our part, our mission has been democratizing access to that alpha generation. Because historically, if you've been following private markets, so private credit, private equity, that's been in the domain of institutional investors, sovereign wealth funds, et cetera. And so in a variety of different ways, not just even outside of digital assets, we focus on how do we provide broader access to these alpha generating investment strategies so that people can retire better, essentially. And so, recently in January, we tokenized one of our fund strategies offering private credit exposure across 6 different permissionless blockchains, which basically we hope will be, kind of some of the things that the panelists today have spoken about, which is providing broader access to alpha generating strategies so that your earnings can be, better invested and higher yielding, and therefore potentially you can retire faster.
Yeah, and I know you bring a little bit of a different point of view, Nathan, with what Ondo is looking to tokenize, more liquid securities.
Yeah, I mean, look, I can share my view on what assets I think will get adoption next, but maybe before I do, this is a really, really common question, not just on panels, but all the big consulting firms are always running polls and studies and trying to answer this, and everyone writes their research reports, showing their own opinion, and it's been interesting to see how those have evolved over the years. But why do people ask this question? I think in part because, they're like asset managers trying to decide like which asset do we tokenize and, try to distribute. And, I think that's all fair, but I want to talk a little bit about like our approach, which is sort of an asset agnostic one. I mean, I think the historical tokenization attempts have mostly been issuer driven, and they've been largely like, the issuer, setting up some fund where ownership is recorded on a blockchain, or some agent setting up a feeder fund on their behalf, and it's sort of a one-off thing, and then you try to like distribute that, one product, generally to like the crypto sphere. And there hasn't yet been a platform that, in a way where there's like strong investor protections and safeguards, reliably lets you get tokenized exposure to almost anything that's investable or like easily investable. And like that's what we're trying to build with Global Market. So, to start, it's going to be just about anything you could buy at a Robinhood or an Interactive Brokers, but like it's pretty easy for us to expand this to like any, private fund that we can get access to, via our relationships, or private stocks, or, whatever. And, in order to like we need to trial and error like what there is demand for, and that's going to vary based on distribution channel. Like there hasn't been enough effort put into connecting these sorts of tokenized securities offerings with, crypto wallets, crypto exchanges, fintechs, that can plug into blockchain rails. Like it's been a lot of just like direct to the end investor, and I think that's been part of the challenge of getting demand for a lot of these products. So I think we're going to learn a lot and like finally get some data to hopefully try to answer this question in the next like 6-12 months, in part through the rollout of Global Markets. But yeah, as I've talked about a good bit, like I think the easiest place to start and the place that we have the highest conviction is just, with liquid public securities, where the thesis is very similar to the thesis, that's led to the success of stablecoins, just high quality, easy to price assets that you can distribute easily, that there's clearly a lot of demand for, outside of blockchains, and just making it easy for folks, that don't have great financial access today outside the US to get access to those. So that's where we're starting, but, I think most assets will settle on chain at some point, and, just sort of a sequencing problem.
To be honest, let me just add in on that. I hear you on, public equities. Obviously, I'm starting, in the less liquid private markets, and so we're on two barbells, if you will. But in reality, I think this really picks up and becomes a thing when you have all the asset classes, or all of the major asset classes on chain. I think in the past 12 years, we've seen one item here, one item there, and it's oh yeah, that's great if I want to buy a bond that's hanging out there on the side, which I don't, but at this point, when you have a selection of private market funds, when you have a selection of public equities, you have a selection of treasuries and stable coins, everything in between, the ETFs, then you're wait, I can put together a real portfolio, one that's customized just for me, and leverage the power of smart contracts. I mean, it's interesting because, in the past decade that we've been doing this, it's why do we tokenize? And how many different answers have we had? But the least obvious answer, probably because we just weren't there until now, we are maybe kind of at the inflection point, but the best answer in my case is that, we can actually be able to, we're actually putting different asset types together on the same operating system, and we're making them all programmable on the same plane. And we're using software to unlock these assets in portfolios. No one ever talks about that. It's always faster settlement times, who cares, right? So I think we're just getting to the point where it starts getting really good, at least for all you enterprise blockchain people out there that have been slogging away for more than a decade with us. I think we're just getting to the part where we're gonna start seeing really exciting portfolio solutions, perhaps bank deposit challenger solutions from crypto wallets, all sorts of customized investment and retirement, solutions.
Well, and I would just say that's a good example of sort of what I meant by democratization. Like, I agree with you that's a milestone in my mind of sort of breaking an old stricture and replacing it with a fresh perspective on how to build portfolios, bundle assets, create programmability between them, and as the on and off ramps become more seamless and blockchain goes under the hood, as you said earlier, I agree that'll be a very useful thing. A nagging concern that I have is just you said investor protections kind of offhandedly, but that one scares me, right? Because I'm a litigator, and I do a lot of really mundane litigation in the crypto kiosk scam space. It is unreal how many elderly people have lost their retirement to romance scams where they funnel their money out through a crypto kiosk. It's incredible, and regulators and police departments are waking up to this, and they're like, there was an article in the newspaper last week about a police department that broke into a kiosk and just took all the money out of it and gave it back to everyone who put it in it and didn't even contact the company. And there's, again, back to the populist thing, we got to be careful about the image, right? And so when we promise people, oh, I'm gonna give access to people to have better investments or a better kind of investment, sure, I started saying I really hope for our democratization, but I also worry that the reason we've always had intermediaries is because people don't make very smart decisions, and then they get stuck with the bill. And so I think we have a hard task on the institutional side to incrementally educate and empower people to take more responsibility for what they do without going so fast that we break it.
It's a huge challenge for adoption in this space. Like, if you have to, even just custodying your own private keys obviously is like an almost impossible barrier to entry for most people. And I agree that democratization, the first step is more people having access to more assets and better investments and so on. But then the next step is them using them in smart contract ecosystems and being able to use them as collateral and rehypothecate them and tranche them and own portions of different loan portfolios. And that's also very complicated stuff that people who are, if you give people who are not financially sophisticated access to very powerful tools, they can hurt themselves. And so I think there will be a big business around the retail onboarding, and I think institutions are not going to be displaced as retail points of contact. I think we're very far in the future where the mass retail adoption is direct on the blockchain. I think we're very far from that because people need somebody. They need to be able to call up support when something goes wrong, and they need somebody to protect them.
Yeah, I mean, we're only just now getting stablecoin federal regulation, thank God, but like, the stablecoins are still kind of the Wild West, right? And there's all sorts of debate around like what is a good and a bad structure, and very different types of investor protections, and getting clarity there now on what good looks like, and people won't have to do so much due diligence soon, but that's going to all play out all over again in tokenized real-world assets more broadly.
Yeah, we'd love to hear any initial thoughts you have. The Genius Act passed the Senate earlier this month. Just thoughts on that, and as you mentioned, the change in administration. We've seen progress at the SEC. Christine, you were a panelist, I believe, at one of the SEC's crypto task force, right?
Tokenization roundtable.
And I know you've met with the SEC, Nathan, and obviously you all have a lot of knowledge there. So just curious of your thoughts on what still needs to be done. And the initial steps that have been taken so far.
I was just going to say, I wish that the market structure bill would have gone before the stablecoin bill, personally. And because it's very much the cart in front of the horse on that front. And so, I don't know how much longer we have on the legislative session. I think, didn't it close last night? And so, like, I'm concerned that there's been a lot of movement too late to have it come out right, but something's better than nothing. So I think one concern I have, there's a little thing in the Genius Act that there's a $10 billion issuance limit for state chartered entities. This is a little bit of a legal weed, but bear with me. Most stablecoin issuers have state chartered trusts. That's how they're able to issue and collateralize the stablecoins. And the way that the act is evolving, it looks like it will move into a federally governed situation. So all of these entities are going to have to either convert to like an OCC charter or some kind of federally regulated situation where they can issue the stablecoins. And that has the ability, I'm not going to express an opinion whether it's good or bad, but it has the ability to choke off many of the younger companies that are relying on state regulation to do this. And it's a gift to the institutions that have been holding back but could launch a stablecoin really quickly because they have all that federal regulatory infrastructure in place already. And it would be like flipping on a switch as opposed to going and applying de novo for a new federally regulated charter. And if you think about the names you think of with stablecoins, they are not federally regulated. They are state regulated. And the bill says that the minute you hit $10 billion in issued assets, which is not very much in a stablecoin world, you have to suddenly go up and be federally regulated. So there's a fight coming between the states. I wouldn't be surprised if the Conference of State Banking Regulators sues to invalidate the act on that front, because that's a huge source of revenue for the states to license all these people. So there's a political battle beyond this that I'm interested to see happen, and I have no idea how it's going to turn out.
Nathan, did you have something on the?
Sure, yeah. I mean, there's a lot of things that the industry needs clarity on. I'll touch on maybe one or two of relevance to Ondo. Our focus right now is on tokenizing securities, US-based securities, but for investors outside of the US. We do that through so-called Reg S securities offerings. We would love to figure out how to bring products to the US. There are some ways that we could do that today without any guidance, but generally speaking, at least if the tokens are at all useful, they would be accredited investor only offerings like we have today for our first permission tokenized treasuries product. So there's a variety of potential structures where I think we could bring tokenized exposure to public equities in the US. A variety of other players in the industry have put together proposals that are public to the SEC for how that could look, and the SEC is engaging on that, and hopefully we can get a blueprint for the way they want to see that done in the US, so we don't have a ton of different structures that are not fungible with each other that market participants have to analyze. And then I guess as a subset of that, we have effectively a yield-bearing stablecoin that's available outside the US, and we would love to figure out a way to bring that into the US as well. The Genius Act does not allow for stablecoins to pay yield, but I think it would be very appropriate for a yield-bearing alternative to a stablecoin to be something that is legislated or regulated by the SEC, like a money market fund or something similar.
Yeah.
And to be clear, I don't think the Genius Act rules out that possibility by any stretch.
Definitely. And we're running out of time. David, just want to bring you in again. What, how do you see success in terms of mass adoption of DeFi? What are you kind of looking for in the next 6 months, a year? And how will you kind of measure that, whether that's successful or not?
I think in the next 6 months to a year, you're going to see the DeFi space able to provide the type of financial services that people need for mass adoption. You're able to see the ability to get loans, the type of loans ordinary people need, payments, off-ramps, because it doesn't do me any good to have magic internet money if I can't, pay my bills with it. You're going to see the space developing through institutional adoption, through partnerships, and through regulatory change, the ability to provide those kinds of products and services that will enable mass adoption. You probably won't see that mass adoption happening. A year is probably when you're just going to start to see that starting to pick up. I think it's a little further off. It's a step on the way.
Yeah, and on the institutional side, in terms of what we could see from banks and asset managers in the next year as they get deeper into the blockchain space, what are you kind of expecting on that front?
I mean, definitely more useful products, as David has requested. Like I would see like like I said, like the full spectrum of products from equities, fixed income, many different types of credit, public and private.
Stable coins from banks and.
Oh yeah, definitely, for sure. Well, I mean, says someone who's not at a bank anymore, but yeah, and like why not? And then, you know, definitely more innovation on how to leverage DeFi to, you know, kind of make more efficient some of the things that David said, like around collateralized lending, you know, creating secondary markets for less liquid assets, some combination. But again, we are at the raw metal like level. I think that if we really want to get mass adoption right, it has to be abstracted away with a very clean, delightful, easy to use, and you know, kind of safe, you know, interface. You know, I think where it exists today, where all of the pioneers in crypto, where all of you are operating, is not where we end up. This is like, you know, you guys are just like, you know, the beta testers on you know, the functionality. But what we're doing is actually the back-end pipes that are supposed to fade into the background, delivered by regulated institutions and beautiful interfaces.
Great.
And just
With
in the
investment
last like year or two, I mean, the advancements in like wallet technology and like DeFi usability have been tremendous. I mean, I think it's such a great example of like continued innovation.
Like all the earn screens, like at the crypto wallets,
Yeah.
I think are like a great, you know, sort of example of where we're going. That's what you're referring to, right?
Yeah, and like turnkey and like other sorts of, you know, wallet tech that's a little more pull than just push. And
Joe, do you want the final word? 10 seconds.
I'll just say it is so refreshing as a lawyer to not have every single conversation be, well, you just can't do that here. So I am really grateful for many of my legal colleagues who now have taken positions. You know, Mike Seelig at the SEC is a former associate of mine, and it's really refreshing to be able to engage with regulators, have rational discussions, and have an actual hope that we're going to have law, regulation, and policy that makes sense between them all. So I'm actually super up on that.
Awesome. Well, we have panels throughout the afternoon, so stick around. But if you give my panelists a round of applause. Thanks so much.
Thank you.